The Federal Reserve Bank just chimed in on inflation, and what they said is that you got to stop blaming the Federal Reserve Bank for inflation and start blaming yourself. Tom Barkin is one of the governors at the Federal Reserve Bank, and after the latest inflation numbers came out, which said that inflation was 3.4%, he was asked about this inflation. And what he said is that the reason why we still have this high inflation is because you have too much money. Americans have too much money and they're still spending all this money, which is why inflation is a problem. It has nothing to do with the Federal Reserve Bank. And this statement came out about a day or so ago, which is why I wanted to share this video with you, because in this statement, he said essentially two things. The first thing that he said is that in order for inflation to come down to 2%, demand will have to weaken, meaning people have to buy less things. And number two is that in order for inflation to come down, quote, customers are going to have to teach people that they don't have pricing power. Meaning you're going to have to go into Chipotle, say, I don't have any money for extra guac, and then walk out. And when enough Americans no longer have enough money to pay for the extra guac, that's when inflation will cool down. Now you might be wondering, well, Jaspreet, why the heck do we care about this random person's opinion on what inflation is? Because there's a lot of opinions on what causes inflation. Some people say inflation is because of corporate greed. Some people say that it's because people have too much money. Some people say it's because of the Federal Reserve Bank. The reason why you want to pay attention to this is because Tom Barkin is one of the governors at the Federal Reserve Bank. And the Federal Reserve Bank makes the decision on what happens with interest rates. They get to decide on whether the economy is going to be stimulated or cooled down by interest rates, which is why you want to pay attention. So what I want to do in this video is go a little bit deeper into what they say. That way you can get a better understanding of what's happening behind the scenes. So you understand what impacts money and your investments. That way you can make smarter decisions with your money. And on the topic of investments, one reminder that on May 21st, which is right around the corner, I'm hosting a live stock market investing workshop. It's completely free. So if you're interested in investing your money in the stock market, even if you're a beginner, even if you've been doing it for a long time, whether you have a 401k or an IRA, there's going to be a ton of value in this workshop. It's completely free. So if you want to learn to see how you could potentially invest your money better, I got the link for you to register for this workshop for free down in the description below. So let me start by talking about number one. The first thing that he said, that in order for inflation to come down to 2%, demand has to weaken. And what he's saying is that the reason why there's so much inflation is because we have more demand than supply for products, which is not wrong in this part of the equation. Because if we have 10 people that want to buy a home, and you list your home for sale for $500,000, and all 10 people want to purchase your home, what are they going to do? Well, if they really want your home, they're going to compete to buy your home. How do they compete? They compete by raising the offer price. So now, instead of getting $500,000 for your home, maybe you sell your home for $575,000 because these 10 buyers are fighting against each other and are willing to pay more money to buy this thing. That's what happens when you have more demand than supply. I want you to hold your thoughts because I'm going to explain what he said, then get into what it all means. The second thing that he said is that in order for inflation to come down, customers have to teach people that they no longer have pricing power. Essentially, what he's saying is that for the last number of years, McDonald's, Chipotle, and every other company in between has been raising their prices. And because they've been raising their prices, well, people are being forced to pay more. But McDonald's and Chipotle and every other company are saying, oh, we raised the price for a guac, but people are still paying. That means we can keep raising the price of our guac. And that's where he's saying that unless and until Americans run out of money, people are going to keep paying the higher prices and companies are going to keep raising the prices very quickly. And that's why he says that Americans have to essentially run out of money in order for inflation to cool down. And that's why inflation is not cooling down, because Americans still have so much money. Until America is broke, inflation is still going to be a problem. But I want to go a little bit deeper into this, because let's now understand, why is it that people have the ability to spend more money? Why is it that people have the ability to keep doing this? And why do people keep having to pay the higher prices? Because if we go back now to what really triggered all of this inflation, the triggering of the inflation was the money printing that happened in 2020 and 2021. Now, what happened then? Obviously, the economy was shut down, but we had trillions of dollars printed. About $5 trillion were printed between 2020 and the early part of 2022 and injected into our economy. That means all this money was printed, given to businesses, given to people, given to the government, and spent. Now, what happens when you have all this money injected into the economy? The value of each individual dollar goes down, causing the price of things to go up. I mean, $100 in 2019 had a lot more buying power than $100 today because the value of the $100 went down and the price of everything from your groceries to your rent to your car has gone up. Now if we start putting this together, what does that mean? People have more money because of the Federal Reserve Bank. Now, in order to solve this inflation problem, what they're saying is, you're the problem. Because you have money, we printed it, don't worry about that part, but because you have more money, that's the cause of the inflation problem, which is kind of an ironic statement to make. Now, this is where what a lot of people say is, no, it's corporate greed. Corporations are the reason why we have inflation. But what you have to remember is corporations have always been greedy. They didn't start being greedy in 2020. They're always trying to maximize their profits. But at the same time, corporations also bear the burden of inflation as well. Remember, corporations also have to pay rent. They also have to pay costs to get the raw materials. And the price of raw materials and rents and your taxes and insurance, those have gone up as well. Not to mention, they also have to pay labor costs. If you have seen a raise between 2019 and today, well, that's an additional cost for the corporation. Now, corporations have to pay higher costs, which means they need higher money. But what was the trigger of all of this? Well, the trigger ultimately goes back to the money printing that happened in the first place. The money printing was injected into the economy. It flooded our system with more dollars. More dollars mean people have more ability to spend. It means businesses have more ability to spend, and it meant the government had more ability to spend. More dollars are flowing through the system. The value of each individual dollar goes down. The price of everything goes up. And people have more dollars. Now, you might have more dollars today, but the more dollars people have in their bank account today isn't as much or as valuable as those same dollars a few years ago. Why? Because that's what inflation is. The value of the dollar has been falling ever since inflation has been a problem. Now, inflation didn't start in 2000. Inflation has been going around for a while. The Federal Reserve Bank has been aiming for a 2% inflation target for decades. Now, this is where you might want to ask the question, why 2%? Why not 1%? Actually, why not 0%? Why do we need this inflation in the first place? And the reason why is because if you understand the way that our economic system works, inflation benefits certain people more than others. Inflation benefits the financially educated. Now, you might wonder, well, what does that mean, Jaspreet? What inflation means is that there are more dollars entering our system. Inflation comes from the word inflate, which means you're inflating the monetary supply. You're increasing the amount of dollars out there. So you make more money from your job. The salaries today are higher than they were in 1970. So now if you're making more money from your job, you have more spending ability. The problem is inflation hurts consumption because that means you have to spend more money at Chipotle. It means you have to spend more money at McDonald's. You have to spend more money when you buy a home. You have to spend more money when you buy a car. That's why everything is more expensive today than it was back in 1970. Inflation means that the value of the dollar drops and you need more money to buy things. So now, you need more money to buy things. It costs more money to buy things. That's what inflation is. But inflation disproportionately benefits certain people. You've probably heard of this growing wealth gap, the divide between the rich and the poor. That didn't start in 2020. That's been going on for decades. And what was the trigger for that? Inflation. Because when you have inflation, that means that the average person who has to consume has to pay more money to buy things. Actually, inflation means that everybody has to pay more money to buy things, but it disproportionately affects the average person, the middle class, and the poor because the wealthy understand money. And what do? They don't just rely on their salary, they own assets, they own investments. And these investments, when you have inflation, grow in value. So when you have this 2% inflation, what does that mean? That's low enough inflation that the average person doesn't notice it. Because when you see 2% inflation, which we haven't seen in a number of years now, but when you see 2% inflation, it's low enough that it doesn't really affect you on a day-to-day basis. But over the years, it starts to affect you, but it's slow enough that you don't notice it. And that's the goal with 2% inflation. But what you have to remember that even if you have 2% inflation, that makes consumption more expensive. Even if your groceries are growing slowly, they're still growing. And the problem is if your salary isn't growing enough to keep up with inflation, you're getting poorer. If your salary is growing just enough to keep up with inflation, you're not getting any wealthier even though you're getting a raise. You have to be growing your income at least as fast as inflation, real inflation, not reported inflation, because many times the real inflation that the average person feels is a lot higher than the reported inflation. Unless you're making more money than the real inflation numbers you're feeling, you're not actually getting any richer or have the ability to get any richer because your money is being eaten away by inflation. So this is where now you got to understand inflation has been happening for decades. It really started ramping up back in the early 1970s because in 1971, our dollar, our money, used to be backed by precious metals. It used to be backed by physical gold. But then in 1971, the dollar was taken off of the gold standard and our dollar became just a piece of paper. And so then it gave the government with the Federal Reserve Bank the ability to print more money. If they can print more money, well, then they can continue spending money because if the Federal Reserve Bank can print an unlimited amount of money, that means the government can spend essentially an unlimited amount of money. And that's what happened in the early 1970s, which led to the inflation problems of the late 1970s and the early 1980s. During that time, inflation was even higher, reported inflation was even higher than what it was today. And then in the early 1980s, in order to bring inflation down, interest rates went very high. Back in the early 1980s, if you wanted to get a mortgage, you were paying around 18% in interest on a 30-year mortgage. And the reason why that happened was because the Federal Reserve Bank had to undo all the stimulus, all the money printing, all the inflation that they created in the 1970s. So now here we are in 2024. The Federal Reserve Bank is working to undo all the inflation that was created in 2020, 2021, 2022, that we felt in 2022, 2023, and 2024. But this is where now you want to understand what is the root cause of inflation. The root cause of inflation comes from the money printing in the first place. Inflation is not a new phenomenon. This has been happening for many decades, but it's just always interesting when you hear the blame put on somebody else because it's very easy to point fingers. It's easy to point fingers that you're the cause of inflation because you keep spending money. You're the cause of inflation because you're pulling money out of your house and you're spending money. You're the cause of inflation because you're spending money on your credit card and you're spending money and that keeps growing the system. You're the cause of inflation because you're a greedy business person and you're raising your prices. Well, what's the root cause of all of this? These are all kind of ancillary issues. The root cause ultimately comes down to the money printing because if the money wasn't being printed, you wouldn't be able to raise the prices in the first place. And that's why I want you to be educated as to what causes inflation and to what's going on because you want to make sure that you're making the best decisions for you, your family, and your investments because at the end of the day, it's up to you to take care of your own financial health. Now, again, if you are an investor and you want to stay up to date on what's happening and you want to understand how you can make the smart decisions with your investments, I'm hosting a free live workshop. I'm going to just be going over my own investment strategy. It's free. I would love to have you on, and I got the link for you down in the description below.